back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Hey, Nick, so we heard from Powell speaking before some congressmen yesterday. He commented on stablecoins, and we have a clip. Let's roll it.
The market just disappears, and that's when people will want their money. So, it's very simple. These are economic activities that are very similar to bank deposits and money market funds, and they need to be regulated in comparable ways.
I just want to get your reaction to some of his comments on stablecoins, Nick.
Yeah, I think this is kind of part of the broader trend we're seeing with regulators and lawmakers around the U.S. Increasingly say that stablecoins are something that needs to be, regulated. They need to be regulated in specific ways, whether that's through, bank regulations or through, maybe a tighter enforcement of securities regulations. But it's definitely been a noticeable shift from, even a year ago, people were talking about stablecoin regulation through the lens of the now defunct Libra project. So, global stablecoins backed by a basket of fiat currencies or something comparable to that. Now we're talking about stablecoins backed by a single asset, namely the U.S. dollar. And, we've got lawmakers name-dropping projects like Tether during congressional hearings and federal Fed bank officials naming the same cryptocurrency in public letters. So there's definitely, this shift that we're seeing towards, greater conversation about crypto stablecoin regulation. And I think the big question now is whether or not that will actually lead to any actual concrete regulations or guidance or, anything beyond just conversation at this point.
So do you think that part of what we're seeing here is we have Powell, who was, did name drop Tether, as you said, and the thought that he would have done that, let's say 2 years ago when the project was only a couple of billion of dollars, would have been unimaginable. But do you think now that they're bringing it up, they're kind of slowly getting into it because of the systemic risk that it could have if they act too swiftly or too sharply? In other words, that if you now have 60 billion of these things floating around, and if they take any sort of severe regulatory action, it could have repercussions beyond the crypto markets?
Yeah, I mean, if the argument is Tether is a key player in the crypto markets, and the crypto markets are at this point, it's more than just Bitcoin. You have futures, you have a lot of retail and institutional investors who are now in crypto or exposed to crypto through various products, whether, that's through their investments in funds that hold MicroStrategy stock, or if they're somehow exposed to futures that are being held or traded by other parties on CME or wherever. There's definitely, I think, a noticeable concern that this is now bigger than just the crypto markets, strictly speaking. And if they act too quickly or too recklessly, and there's a follow-on effect that would impact more than just the crypto traders.
Nick, I wonder if you could comment on his when he said, you don't need stablecoins. We wouldn't need cryptocurrencies if you had digital U.S. currency.
Yeah, I'm not too sure. I guess one of the arguments there is, if your idea about crypto is that its value proposition is electronic payment system that's faster and cheaper and easier to use than the existing U.S. at least payment system, then I think that argument makes sense. But if you're looking at crypto as something that's supposed to be stateless or free of government control and free of centralized control, then I think the argument falls apart a little bit. But a lot of the conversation around the digital dollar is that first argument that it's supposed to create something that's more accessible, faster, cheaper, much easier to use than electronic payments in the U.S. right now, which I think might actually even strictly be a U.S. problem. I think in Europe and other countries, you do have other forms of electronic payments that don't require crypto that are fairly, easy to set up and utilize.
Nick, we also learned that this Fed report on the central bank digital currency is likely to come out in September. Do you think we're going to see anything interesting in this report?
So actually had a chance to email a spokesperson at the Boston Fed last night, and I heard back. So the report coming out in September is separate from the central bank digital currency report that the Boston Fed still intends to publish sometime this quarter. So we're now expecting, it seems, at least two different reports. One that's going to explain how the U.S. federal bank is going to be looking at a central bank digital currency, so a digital dollar, and a separate report that's looking more at, it sounds like, policy and regulations around crypto more broadly. So I think that could be very important, especially if, as we said before, there's a lot of conversation right now, but it remains to be seen what the concrete regulation will results from this conversation will be. And that report might be a, key symbol or signal for what that'll look like.